Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Monday, November 11th, 2013. Last week, S&P futures auctioned up to retest the multi-year high at or near 1775. Following the rally to retest the high, on Thursday the S&P sold off through the entire trading range. S&P futures sold down below the prior week's low and auctioned back to the October 23rd low at or near 1736. Following the climactic sell-off and the rout of the previous week's trading range, the price path reversed direction and the S&P auctioned back up through the entire trading range, staging a massive short covering rally. On Friday, the S&P ended the session at or near 1765. At the open of Sunday's Globex session, S&P futures pulled back modestly below Friday's close and auctioned down at or near 1762. During Monday's holiday session, the S&P auctioned back above Friday's high and traded up at or near 1770. The broad benchmark index closed the session modestly above the previous day's close. For a more detailed look at the recent market developments, we'll focus our analysis on the Kalman filter model. Here we see the route of the trading range that developed last Thursday when the S&P sold below all previous support levels. The climax selling, which occurred down at 1736, the prior October 23rd low, is indicated here. Note that when the S&P auctioned back up to retest the overnight high at or near 1751, there was no continued selling pressure, resulting in the S&P trading back down to Friday's opening range low. Following the minor pullback to 1743, equal to the prior low from Thursday, the Kalman filter turned up. Buying interest entered the market and the S&P auctioned above the overnight Globex high, traded back up to the breakdown point at or near 1762, and went on to rally into Friday's close. Here we see today's overnight pullback at or near the 1762 price level and the continuation of Friday's short covering rally up to 1770. As the S&P auctioned up through the trading range on Friday, the market structure indicates several minor support levels above Friday's low. First, we have support down at 1743, then again at 1754, and finally at the stopping point of Friday's rally just prior to the close at 1762, where the S&P pulled back during today's session. There is minor resistance only at today's high, although during the uptick to 1770, the order flow events indicated buy programs waning. Resistance is now located at Thursday's high at 1774. Should buying interest resume and the S&P auction above Monday's high and retest the multi-year high, there is the possibility of the S&P extending the trading range up to 1784, our current maximum likelihood estimate. In the event that a retest of today's high fails to elicit buying interest, and the S&P pulls back down to today's low at 1762, while there is still potential for the market to hold support at that price level, it should be noted that this would be the second pullback to the 1762 price area. Thus, the probability of a lower low increases, and if initiated selling occurred during the pullback to 1762, S&P futures could potentially sell back down at or near the midpoint of the developing trading range, at or near the 1754 price level. That concludes our recap of Monday's market structure. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.